moving on to our Investor Eye segment. Early growth investment fund Atomic Capital has announced the final close of its maiden fund at 400 crore rupees, targeting early growth stage consumer startups in India. Now, the Mumbai-based fund will invest in sectors including food and beverages, personal care, apparel and consumer technology, with check sizes ranging from 10 to 30 crore rupees. The fund claims it takes an active operational role with its portfolio companies and aims to back 10 to 12 startups over an 8-year horizon. To talk about the fund strategy and the future of Indian consumer brands, joining me now is Apoorv Gautam, founder and managing partner of Atomic Capital. Apoorv, welcome to Startup Street. Now, you position Atomic Capital as an operating VC. First, what does that mean in practice? And then tell us, how does your hands-on approach differ from traditional venture capital?
First of all, thank you for having me, and it's a pleasure to be here. I think our core belief at Atomic Capital is that throwing money at the problem doesn't solve the problem. And it's not just capital which is required for a business to be successful. So what we like to do is we like to come in at a stage which we call it post-product market fit. And we apply a very unique hands-on approach where we obviously provide capital, which is necessary but not sufficient. But beyond that, we help founders in X to 10X journey. And in that journey, we actually contextualize our playbook for each company because we believe that every company is unique. Having said that, there are common principles. For example, building the right team, making the right strategic choices, having the right decisions. I think that is where we help founders in that journey.
All right. Apoorv, with check sizes of 10 to 30 crore rupees and a portion of the fund preserved for follow-on rounds, you're building a focused portfolio of 10 to 12 startups. Now, within consumer tech, what innovations are you most excited to back right now?
No, I think that's a very important question for us because given our playbook requires us to spend significant time with our portfolio, we are not going to do a spray and pray approach where we make large number of investments. That's why we like to take large concentrated positions in fewer companies. Having said that, I think the few innovations which we are really looking forward is we are chasing India's consumption in 2030. And if you look at India's consumer in 2030, what will drive that consumption? And I think a couple of themes emerge. One is Middle India. We're extremely bullish the way Middle India is going to drive the future of India's consumption. And second, the digital infrastructure. I think the way India's digital infrastructure is evolving, led by UPI, I think very bullish on how can we leverage that in our investments going forward.
In fact, you've already invested 50 crore rupees in 4 startups like, Conscious Chemist and Doodh Wale Farms. What attracted you to these companies? And if you could also take us through the cornerstone of your investment philosophy, how do you evaluate a startup?
Absolutely. We call investing is a professional marriage. And then the way in marriage, what matters most is 2 people. Similarly, I think in our journey, the founders play a very, very important role. Given that we spend significant time with our founders, and our playbook is very, very extensive, and we sort of spend significant time with them. So I think founders and our alignment with the playbook plays a very important role. Second, I would say we focus a lot on capital efficiency. And our view is that capital efficiency is DNA of the company. And a lot of founders feel that profitability should be solved only at scale, while our view at Atomic Capital is that you need to solve that from day one. So we also like to back companies which are solving the problem in a very capital efficient manner. And last but not the least is revenue momentum, because we are in the business of making good businesses great. So that's, I think, the last thing we look for.
All right. And in fact, you're currently evaluating over 20 companies and have issued a term sheet for your 5th investment. How many investments do you plan to make by year end, Apoorv?
Absolutely. I think in our view, it takes significant time and effort from our side to deploy our playbook, because we are not just writing a check and moving on. Because we are spending significant time and energy with each and every portfolio company. For example, we connect with every company once a week. Because of that, we are not going to make large number of investments. Thankfully, we are getting a lot of founder love, and we are getting inbound from multiple companies and founders. We want to be very razor focused, and we will do approximately 1 investment per quarter. So this year, I think we'll do mostly 2 to 3 more investments.
All right, 2 to 3 more investments this year. Let's get a sectoral view. The consumer sector is rapidly evolving with shifts in preferences and technology, emerging trends in Indian consumer tech. If you could tell us, what are you most bullish about? You spoke about UPI and Middle India, but what are the emerging trends that you're most bullish about?
Absolutely. I think if I look at India's consumer in 2030, and if India GDP per capita will double, hopefully by then. If I take that view, I think there are few mega trends which are emerging. One, as people become more affluent, they want to look good. So there are certain categories which will fall into that bucket, whether it's fashion, whether it's skincare, whether it's cosmetics, hair care. So I think that's one big piece of our investment. Second, I would say as Indians become more affluent, they want to focus a lot more on wellness, whether it's physical wellness, mental wellness, spiritual wellness. So I think there are a lot of investment. I think we would like to make an investment in that category. Third, I would say that consumer enabler, because the way consumer space will be evolving, a lot of consumer brands will be coming up. The companies which are solving a pain point of a consumer company, whether it's a logistics company, a payment company, or manufacturing company. So consumer enabler will be the third piece we are very excited about.
All right. Many startups, Apoorv, face challenges scaling beyond initial product market fit. And you spoke about how Atomic Capital supports founders operationally beyond just funding. So what would be your one piece of advice for early growth stage founders?
It's absolutely right. And we have seen that as well. And I think for me, the core reason is that people feel that throwing money at the problem will solve the problem. And capital alone will be able to help them solve all the problems. But in our view, that is not the case. And if I were to offer one piece of advice, which I've seen a lot of founders realize but don't do that well, is building the right team. What I've seen is that what it takes companies to go from 0 to 1 is not necessarily 2 for 1 to 100. And founders are very reactive and they like to hustle. But org building and hiring is not something you can do in a reactive manner. So our ability to work with founders in a very proactive manner and help them build organization, I think makes a big difference. And that is something I would advise everyone.
Okay. My one final, question, what is your roadmap for the next 2 to 3 years in terms of fund deployment and building long-term value? And will you be announcing your second fund anytime soon?
I think making promises is easy. Delivering them is hard. So I think the promises are made to our investors. So that part is done. Right now, it's time for us to just put our head down and execute. Right now, the entire team's focus is on to deliver Fund 1. And we are not just thinking about anything else. And hopefully next time when I'm on your show, I can talk about Fund 2.
Absolutely. We'll surely keep a track of that. Apoorv, many thanks for joining us on Startup Street today and wish you the very best with your Fund 1.
Thank you for having me.
On that note, it's time for us